Everyone thinks credit card transactions are simple. They're anything but. The true complexity lies in a system of hidden charges, specifically the interchange fee. This seemingly small percentage, collected on nearly every card swipe, forms a colossal revenue stream for banks and payment networks globally. Understanding its origins and mechanics reveals a fundamental piece of our modern financial infrastructure. The story of interchange fees began in the mid-20th century with the earliest credit cards. In 1958, Bank of America introduced Bank AmeriCard, later Visa. Its initial model involved merchants depositing sales slips directly with their issuing bank. But as cards spread, a merchant's bank might not be the same as the cardholder's bank. This created a problem. How did the merchant's bank get paid by the cardholder's bank? The solution was the interchange fee. It was essentially a fee paid by the merchant's bank to the cardholder's bank to cover the cost of processing the transaction and the risk of fraud. This fee incentivized banks to issue cards and bring more customers into the network. Over time, major networks like Visa and MasterCard standardized these fees. They established intricate schedules varying by merchant type, transaction size, and even card type. A premium travel card often carries a higher interchange fee than a basic debit card. These schedules are not publicly negotiated, but set by the networks themselves. When you swipe your card, the merchant pays a discount rate, typically 5% to 5% of the transaction value. This rate is then broken down. The largest portion, the interchange fee, goes to the card issuing bank. A smaller network fee goes to Visa or MasterCard for facilitating the transaction. The remaining portion is kept by the merchant's acquiring bank. This system generates immense revenue. For card issuing banks, interchange fees are a primary income source, covering rewards programs, fraud protection, and operational costs. For networks like Visa and MasterCard, their revenue comes from the smaller network fees and the sheer volume of transactions they process globally. The cumulative impact of these fees is staggering. In the United States alone, merchants pay tens of billions of dollars annually in interchange fees. This cost is ultimately factored into the prices consumers pay for goods and services, often without realizing it. It's an invisible tax on nearly every purchase made with plastic. This video is for educational and informational purposes only and is not financial advice. Always do your own research. Subscribe if you're interested in uncovering the hidden mechanics behind everyday industries. This video is for educational and informational purposes only and is not financial advice. Always do your own research.